Welcome to the Cairn Homes 2025 Preliminary Results Analyst and Investor Call, which will be hosted by Michael Stanley, Chief Executive Officer, and Richard Ball, Chief Financial Officer. After the presentation, there will be a moderated Q&A session where we welcome questions from anybody on the line. Participants can verbally ask a question by slowly pressing *11 on your telephone. You will then hear an automated message advising your hand is raised. Please note that today's call is being recorded. I would now like to hand the call over to your first speaker today, Michael Stanley, Chief Executive Officer. Please go ahead.
Thank you, Sandra. Good morning, everybody, and thank you for joining us for our 2025 results and outlook. I'm joined here in Cairn today by Richard Ball, our CFO, and Alvin Malloy, our Head of Investor Relations, for this morning's presentation. We're very pleased to be reporting on a strong set of results for 25. The business is now in its second decade, and I believe we've established ourselves not only as a leading Irish home builder, but a leading Irish company. As we enter our second decade, we will retain our ambitious approach. And you will see from today's presentation that we intend to increase our annual unit output by 35% over the next 2 years, without making any compromise to the quality of the homes we build and the reputation we have earned. I'll start with our 2025 highlights on slide 4. We've had a strong year and delivered revenue of just shy of €945 million from 2,365 new homes sold in that period. We witnessed exceptional demand for the homes we are building in great locations, and our multi-year order book has grown to €1.32 billion, with a significant portion of that growth coming from first-time buyer sales. We launched 11 new private schemes in 2025 and achieved a very strong average weekly sales rate of 4.2 new homes. We've increased our gross margin slightly to 22.1%, and more importantly, our efficient operating model is delivering an improved operating margin of 17.8%. Moving now to slide 5. Our scaled operating platform is now active across 25 developments in Dublin, in the surrounding counties around Dublin, in Cork, and in Galway. We've grown our headcount by 30% to 600 people working in the company today. And we've had a successful year in planning with over 3,650 new homes granted full planning permission. Our WIP investment in the period has also increased to over €800 million, and we've managed our build costs to circa 1% for the full year. Our performance in recent years has significantly bolstered the strength and size of our balance sheet. With total assets of €1.3 billion, including land and WIP investment of over €1.1 billion, the financial strength that we now have gives us a solid foundation and will support the sizable increase in our housing output that we are outlining to you all today. We are delivering for our shareholders, with ROE again increasing in 2025 to 16.6%, and we will be returning 10 cents per share in dividends, including our proposed final dividend of 5.9%, which we will pay in May. This represents a year-on-year dividend growth of 22%. Slide 6. We are also pleased to be upgrading our full 2026 guidance and revenue, which is now expected to be between €1.05 and €1.08 billion, and operating profit increasing to between €180 and €185 million. Looking beyond 2026, we are firmly positioned to achieve output of circa 6,000 new homes in the next 2 years, including 3,200 new homes in 2027. This is clear evidence that our strategy of delivering large mixed-tenure schemes in areas of high demand, strong employment, and multimodal transport links is certainly bearing fruit. And I might bring you now to slide 7 and more detail on our growing order book. We already have just over 2,000 new homes closed and forward sold for 2026. Weather conditions have brought a somewhat challenging start to the year for us, but we're an agile business and remain confident that we can recover lost time to meet our upgraded guidance for this year. Our order book also includes forward sales of 1,374 new homes and over 500 million of revenue for 27 and 28. I might spend a little bit of time on slide 8. Cairn recognises that affordability is a very significant challenge for many of our customers. We are continually challenging ourselves to manage cost inflation, and we constantly seek ways to make our homes available to as wide a market as possible. If you look at the slide, in the last 5 years, we have delivered very close to 9,000 new homes. Cairn's average selling price has increased by 4.9% during that period. This is a considerable achievement when one compares this to the broader market for new homes in Ireland, with sales prices increasing by nearly 30% in that same period. Interestingly, on the right-hand side, you'll see that European house price growth is 25% in the 5 years to 2024, slightly lower than Ireland, but certainly illustrating that they clearly face similar challenges. You'll also see on the right-hand side of the slide there are other benchmarks we test ourselves against, including industry indicators that are used to track construction costs. The tender price index has increased by close to 39% in the 5 years to 25, and the capital goods price index has also increased by 28%. By any of these comparisons, Cairn's scale, our efficient operating platform, and our constant drive to prioritise affordability is paying dividends. And now, before I hand you over to Richie, I wanted to bring you through our financial performance. I wanted to update you on some of the recent evolving trends in housing policy, and in particular how some of these positive policy changes are particularly relevant to Cairn. On slide 9, I was going to talk about the government's policy on higher densities and better land use. Their Delivering Homes, Building Communities housing plan provides a full suite of measures to encourage more sustainable land use and to support the significant infrastructure investment planned for Ireland in the near term. This is a necessary departure from the past decades, which had a low density bias, and the majority of homes in that period being delivered were own-door houses. Many factors have played into this bias, including the higher cost of apartment delivery, lack of realisable demand for apartments, capital constraints affecting home builders, and difficulties getting higher density schemes through our planning system. New government policies are now designed to address many of these challenges, and thankfully it is now accepted that own-door housing output is unlikely to breach current levels in the years ahead, and increasing apartment output is the only credible way for the government to achieve housing targets. This certainly aligns with Cairn's strength. Approximately 90%, about 88% of currently available residentially zoned land in Ireland is now strictly mandated for medium and high density delivery, meaning the vast majority of development sites in the coming years will have to include a high proportion of apartments. You'll see from the slide some examples and the densities that we are achieving on our projects. These new, more sustainable developments that we are building today include energy-efficient apartments we are delivering on behalf of state-funded partners, also apartments that we're now delivering for private buyers through the new impactful Crecona scheme, and duplex and houses that we sell to private buyers. This approach allows us to create thriving mixed-tenure communities that meet density guidelines and result in more sustainable land use. And finally, for the moment, onto slide 10, where we consider the government's current stake in housing in Ireland. Today, the Irish government only owns 10.4% of our total dwelling stock, which, as you can see from the graph, is considerably lower than similarly sized comparable European countries such as Denmark, Austria, and the Netherlands. The tenure we feel that is impacted most by this deficit is affordable accommodation, which must be boosted to meet the housing needs of our growing working population. Again, Delivering Homes, Building Communities states that the social and affordable pipelines of the Affordable Housing Associations and the Land Development Agency will be primarily for apartments. Based on this clear policy direction, we expect that up to 75% of new dwellings added to the state's ownership by 2030 will in fact be apartments. It is important to emphasise that while the government is playing a larger role, you will see on the right-hand side they were responsible for only 13.1% of all residential transactions in Ireland in the 5 years to 2024, which includes both new and second-hand homes. Over 65% of all homes are still being delivered for the private market, and the data table shows the output of new home completions from 2020 to 2024. You may be aware that 2025 the input increased to 36,000 units, but it shows how much the state is acquiring or building from the overall market completions and transactions. I'm going to now hand you over to Richie, who'll bring you through our financial highlights.
Thank you, Michael, and good morning, everyone. I'm delighted to be presenting a strong set of results for full year 2025 to you this morning. As Michael mentioned earlier, the management team has great confidence and ambitions for the outlook of the business. This confidence is reflected in the upgraded market guidance for 2026 and the introduction of unit guidance for 2027. Moving to slide 12. You'll see strong growth in our revenue, up 10% for the year, delivering a total revenue figure of 944.6 million. A gross profit figure of 208.8 million, with a gross margin of 22.1%, up 40 basis points from the prior year. That delivered a operating profit of 168.6 million, which is a 12% increase in the period. And our profit after tax grew 16% to 132.77 million, giving an impressive earnings per share growth of 19%. We've today proposed a final dividend of 5.9% per ordinary share, which is an increase of 22% from last year and represents a payout ratio of 47%. Moving to the next slide, cash flow highlights. When we last spoke to you in September, we called out the significant investment that we made in H1. That has then translated into a significant cash generation into H2, where we delivered 189.3 million of net cash from operating activities, which has given us a full year net cash from operating activities of 70.6 million after we made a net investment in work in progress for the year of 167.4 million and made shareholder returns of 54.7 million. Following are the key highlights on slide 14. Total investment in land and WIP stands at 1.12 billion, reflecting significant scale and future delivery capacity. Net debt of 171.3 million remains modest relative to the asset base, with debt to GAV of 17.8%. We have 500 million of committed debt facilities, with an average maturity of nearly 4 years, which provides substantial financial flexibility. We grew our balance sheet in the period as net assets increased to 836.7 million, an increase of 78.5 million year on year. Moving to slide 15. As you can see, our average selling price and unit mix. We're delivering homes at extremely competitive price points against the broader market. Both houses and apartments for the period saw modest pricing increase at 1% and 2% respectively, while still generating attractive margins. In 2025, 63% of our delivery was apartments, and we continue to grow our low-density housing to 24% of output. We expect our mix to transition to 50% apartments and 50% duplexes and houses in the medium term, as previously highlighted. Cairn significantly increased investment in the business last year, and as detailed in slide 16, work in progress investment amounted to 801 million, a 65% increase year on year, underpinning a 1.32 billion closed forward order book, which is up 33% from 2024. This demonstrates strong momentum, confidence in demand, and clear visibility on near-term revenues. Moving to slide 17. Cairn controls a land bank of 18,400 units across 39 sites. The land bank is split between 13 high-density sites with an average plot cost of 43,000 and 26 low-density sites with a lower average plot cost of 33,000. This mix allows Cairn to optimize returns across different market segments and respond to demand and policy trends. The overall average plot cost of 37,000 reflects a disciplined approach to land acquisition and a historic low-cost land bank. We also have circa 2,000 unit strategic land bank, which reduces upfront capital requirements and are accretive to return. In addition, Cairn has a land pipeline of circa 6,000 units across 12 sites, which are a combination of options, partnerships, and JVs in exclusive negotiations. These sites provide long-term growth without near-term balance sheet strain. The strategy positions Cairn as a counterparty of choice for off-market and structured land deals, allows us to leverage our platform capability by influencing the design and planning results while enhancing our returns. Moving to slide 18. We are a long-term, ambitious, and sustainable business, which has consistently delivered multi-year growth in volumes, revenue, and profit. Our approach to capital allocation supports and underpins this growth strategy. We prioritize a strong and resilient balance sheet, as demonstrated by our 16.5% return on equity. We invest significantly in our two main raw materials, WIP and land, a focus on investment to support and drive our long-term sustainable growth. We are actively implementing our land acquisition strategy, as you've seen on the previous slide, which is underpinned by our disciplined capital deployment approach. We deliver shareholder returns. We make progressive ordinary dividend payments underpinned by a policy, and we distribute surplus capital to shareholders after investing in our business and paying dividends. In total, we have returned over 490 million to shareholders since the start of 2019, including the final proposed dividend of 5.9 cents announced today. As you've heard from both Michael and myself, we remain very confident about our future outlook, as evidenced by the issuing of our upgraded guidance for FY26 as follows. Revenue of circa 1.05 billion to 1.08 billion, an operating profit of circa 180 million to 185 million, a return on equity of circa 16.5%, and the introduction of unit guidance of circa 3,200 for 2027, resulting in a 35% increase over a 2-year period. I will now hand you back over to Michael.
Thank you, Richard. Just a few slides to cover and wrap up our presentation this morning. On slide 20, very pleased to announce that our sustainability strategy and execution going forward will now be led by the newest member of Cairn's leadership team, Madalena Loughrey-Grant, who joined as our new CSSO in recent months after a long and very successful career in our industry in the UK. And no doubt Madalena will ensure that sustainability remains a part of our DNA, and I know she has plans to further increase our influence in this really important area. Some highlights and recent highlights are included in the slide, including our A CDP score, the reduction in our gender pay gap. We're proud that over 270 apprentices are now registered on the Cairn Apprenticeship Academy programme. We've been recognised as a leader in European home building in promoting and building to passive house standard. We are also recognised recently as one of Ireland's top 5 best large workplaces. On slide 21, I want to look back on the decade of growth in Cairn. As you can see from the graphs, Cairn has experienced phenomenal annual compound growth across numerous KPIs since our first full trading year in 2016, including our revenue, which grew by a compound rate close to 42%, and our housing output, by a similar level. We've also grown our earnings per share at an annual growth rate of 56%, and our ROE at a rate of 48%, having breached our 15% target in 2024. I want to acknowledge and thank the entire Cairn team, both past and present, for this success. And to conclude now on slide 22, we are very confident about the outlook for our business, notwithstanding current geopolitical uncertainty. This confidence is based on a number of factors. Fundamental to this is a decade that I've just illustrated and the industry-leading platform that we have today as a result. There is significant momentum in our business. Our reinvestment policy is delivering at pace. We have good visibility through our growing order book. There is a strong and sustained policy backdrop to housing delivery in Ireland, and there is exceptional demand for our new homes. That concludes myself and Richie's presentation today, and I'll hand you back to Sandra now to start the Q&A. Thank you.
As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 1 and 1 again. We will now take the first question from the line of Shane Carberry from Goodbody. Please go ahead.
Morning. Thanks, Mike.
Hey, Shane. How are you?
Morning, Michael and Richie. Thanks very much for taking my questions, and well done on a fantastic FY25 set of results. If I can go with three, please. The first one, maybe just a bit of an update, Michael, in terms of where we stand from a land market perspective, what you're seeing currently, and how we should think about kind of the land purchasing strategy through 2026, given how you've kind of bolstered the land bank over the last couple of years. The second then, just want to expand on slide 8 a little bit more. I think it's really interesting to see kind of the level of pricing from Cairn versus the rest of the industry. And how should I think about that? Is it really just a scale point, or is there a little bit more kind of going on there in terms of where you've been able to keep prices at a more affordable level versus the rest of the industry? And then the third point is really just, I guess, around slide 9, and you kind of go through the government policies regarding kind of high density. Does that make you think any differently about the kind of mix going forward? I know you've kind of reiterated that the medium-term mix guidance. Will that be a little bit more gradual now towards the kind of 50-50 split, given the initiatives and policy in place from a high density perspective, or just does it make you think any differently about the mix going forward? Would be helpful.
Yeah. I suppose let's start on the high density one, if that's okay, Shane. I mean,
Yep.
I suppose what we're trying to put across today is, we have been, I suppose, speaking to government for many, many years now about what we saw as a kind of almost a natural cap on the number of homes that could be built at lower densities, particularly in locations close to employment, urban areas, close, in and around our cities. And there was very obvious reasons why, and probably nobody's fault necessarily, that apartments weren't being built. What we've seen over the last couple of years is a real recognition of that. You'd be aware, for example, that the government have tweaked guidelines for apartments to try and make them more viable in terms of how they're designed. They're still at an incredibly high standard by any international comparison. Streamlining the planning system is a massive help also. But what's particularly helpful is, the fact that now we're seeing more realizable demand. We've had a lot more incoming, Richie, in the last 12 months from PRS Capital looking at Ireland again. We've seen some transactions in the multifamily area. And we believe Croí Cónaí is very impactful because I think Croí Cónaí recognize that not all home buyers, many of them do want houses, and we have to recognize that the average home first-time buyer of a Cairn home has probably grown from about 31, 32 years of age up to 38, 39 years of age in the last number of years. So people are older, unfortunately, buying their first home. But many people are now choosing to purchase an apartment. And what we saw in our first couple of Croí Cónaí launches, which is very encouraging, was younger working people buying apartments. So So that's how we think about mix, I suppose, Shane. We will continue to absolutely prioritize home buyers and private home buyers, but thankfully now we're able to offer them apartments as well as houses and duplexes. So that's the point we're trying to put across today. I think thankfully, if I think about the land market in two ways. Firstly, our land market, we can afford now to be very strategic. We have a large land bank. We're still building a land in 7 mills that we bought, for example, in 2016. And that certainly helps us with our margins. And we've managed to replace a lot of great land, but now we can think about replacing our land with more strategic opportunities. And Richie talked a little bit about that in our presentation. Almost all of those transactions are off market. I think Cairn has built a reputation over the last 10 or 11 years as a trusted acquirer of land. Many private landowners who are seeing some of their land rezoned want to get Cairn involved in that journey, and we can step in and do option deals, which is where most of the growth will probably come in our land bank. So you now see a land bank that's wholly owned, a land bank that is more strategic, and a pipeline that's mainly strategic, and also will include some new joint ventures. So as we go through this year, I think our shareholders can expect to see more information filtering through on the pipeline of particularly partnerships and new joint ventures, Richard, that we're working on. Yeah, to say. More broadly in the land market, I'm encouraged that it's much more active in the last 6 to 12 months. It probably, again, maybe is a reflection of positive government policy that there is more realizable demand, but we're seeing more activity in the land market. We're seeing other home builders acquiring land, and I think that's very positive. We've certainly seen a tick up in transactions in the land area. Excuse me. In terms of how we control our cost, look, this has to be how a home builder must think today. What we've tried to put across in this slide is that all developed economies face the same challenge. And unfortunately, throughout Europe and indeed Ireland, the average cost of a home has now moved up to, in most cases, between 7 and 10 times average salary in those countries across the board. So it's not a unique challenge in Ireland. And when homes and when some of the costs that we're facing and that we project are going to continue to challenge us and our industry more broadly, we have to work exceptionally hard to try and control those costs. We do that in multiple ways. I mean, we design and deliver our homes based on the knowledge that we've built up over a decade. We understand we were probably first to market on standardizing our unit types, streamlining our supply chain, partnering with our subcontractors. We've had a very active innovation strategy for a number of years, looking at product replacement, off-site manufacturing techniques that are all now embedded in our operation platform. And on a daily basis, we have 5,000 or 6,000 people working on our site. So we have an incredible advantage in Ireland when it comes to our procurement, our scale, and our partnerships. So it's a long answer, Shane, but all of that plays into the results you see I saw today on slide 8, which is that 4.9%.
Makes sense. Thanks, Michael.
Thank you. We will now take the next question from the line of Jonathan Coubrough from Deutsche Bank. Please go ahead.
Oh, thanks. Good morning. Can you hear me okay?
Can indeed, Johnny. How are you?
Great. Yeah, all well, thanks. Thanks for taking my questions. But firstly, in terms of the WIP investment, it'd be helpful to hear how much of that has gone into houses versus apartments and how much into your first-time buyer products. Perhaps it's hard to disaggregate it on your mixed tenure sites, but any detail you can provide on where that WIP has been invested would be very helpful. And also going back to the land bank in the results statement, you provide detail on your wholly owned land bank in terms of average plot cost. I'd just be interested to hear how you think margins would compare in your strategic land bank and the strategic pipeline as well. And then just to round that off, you mentioned there, Michael, you've got a very long land bank, and so you're able to be strategic. Do you have a target for how many units you'd like to have under option, or is it just going to be opportunity-led? Thanks very much.
Yeah, it's a good question on the last one. I might hand over to Richie just on WIP and chat a little bit about the profile of our work in progress and indeed some of the projects that are probably fair to say were supported with forward funding as well, Rich, which helped that. But I suppose in terms of go forward, we're not going to set a target, and the strategic land options that we'll take on have to be for us in the right locations. They have to be accretive. The good news is that most landowners see Cairn adding significant value and want to get us on board early days. In some cases, for example, some of the land we're optioning isn't even zoned yet for residential housing, but that's part of our expertise, is being able to identify those opportunities and help journey land through zoning and then onto full planning and construction. So I would say more of if we look forward, I think it's fair to say, Richie, we don't see a massive capital investment in new land in terms of, the type of land acquisition we saw in 25. But we'd like to see, with our unit output now going over 3,000 units from next year, you'd certainly like to see the entire land bank, including strategic land, sitting at that 20,000 unit level. But 30 or 40% of that could be strategic or joint ventures, where in some cases on those JVs, we're not building on Cairn land. Do you want to talk about WIP and maybe the land bank? Any of your thoughts, Richie, on the land bank?
Yeah, just on to the WIP investment. Obviously, you saw numbers that obviously increased our WIP investment quite significantly, and obviously up to 801 million. The big growth probably from FY 2024 on a relative basis was increasing into our housing demand. So we would have seen a big uptick in WIP investment into our housing output from 24 into 25, but obviously we continue to do and execute a number of other forward fund contracts with state funded partners as well. So that also fed into some of the growth in FY 25. And I suppose the big call out then on that is just obviously what our close and forward order book looks like, and that growth of that 33% that we've seen from 24 as well, which has been very positive. I think one point to just add to what Michael's comment just on the land acquisition, and you're probably the replacement costs of our land bank, and can we still generate accretive returns? And the answer is yes, we can, because if when we're structuring these land acquisitions now, we have better optionality with regard to initial capital outlay up front. And we're also obviously able to look to execute some forward fund contracts as well, which obviously drive our return on equity profile. You may obviously give up some size on the gross margin side, but that's fine if you're getting your WIP paid for.
Yeah.
Great. Thank you very much.
Thank you.
Thank you. We will now take the next question from the line of Colin Sheridan from Davy. Please go ahead.
Thank you, and good morning, guys. Thanks for the presentation. A few from me, if that's all right. First, just on build costs, clearly a great result in 2025. I guess given the environment that we're in at the moment and maybe looking down higher energy costs, maybe give us a feel for how well contracted and hedged you are for going forward 26 and maybe into 27 at this point in time. The second one then, just on the 27 guidance. I mean, clearly it's a measure how confident you are yourselves that you're talking about those volumes already. And maybe just give us a little bit of color in terms of, of those targeted 3,200, how many are fully planned, how many are already on site, how many are maybe in the order book. That kind of color would be really good. And then maybe just a quick one on the order book. I mean, clearly huge growth into the end of the year on that front. I wonder, the private side, are you kind of reaching the limits in terms of how far forward you can sell those units with kind of mortgage approvals and given how really large the order book is relative to, say, the revenue for this year, some color on that would be great. Thanks, guys.
Yeah, I might hand back to Richie just on the, I'll give you, Rich, on the build cost, suppose the environment externally and how we think about that. Look, I think what you're going to see actually, Colin, is you're going to see that order book continue to grow for us. And the majority of that growth as we go throughout the year is going to be in private sales. What we're seeing is customers with more realizable demand now, Colin. That includes Croí Cónaí, which I mentioned earlier, where buyers of apartments are able to, in some cases, purchase a two-bed apartment for a mortgage that's averaging just sub €1,000 a month for two-bed apartments in locations that might rent for €2,000 to €2,500 a month. It's an incredibly compelling proposition for new home buyers. And thankfully, we've seen significant take-up on the government's first home schemes and Help to Buy. So what we're seeing is buyers well-positioned to forward purchase and know that they've got a home acquired that might be ready in 3 to 6 months. So you're going to see that order book growing. Our 3,200 projection for 2027 is all on active sites, Colin, not on sites we haven't yet commenced. So we're very comfortable. We wouldn't go out with that guidance if we weren't absolutely comfortable with that number. It is a significant step up, but we invested and prepared ourselves for that. We were very clear with our shareholders that we were prepared to forego buybacks in a period when we really liked our opportunity. We liked our investment into our business at the type of ROEs and the growing ROEs we were seeing as a business. That was very compelling for us, and we're really pleased that's paying off for our shareholders.
Yeah, I'll just probably cover the build cost inflation point, Colin. Obviously, we called out this morning, obviously, what we realized inflation. Last year, we're obviously circling around kind of 1% compared to kind of broader industry was at 2%. And when we move forward into 26, we're 75% procured on our active sites and probably about 50% procured on 2027.
That's great.
Yeah,
Thanks a lot for the call, guys.
The only thing I'd probably add, Colin, which I suppose just in terms of that growing order book, it's also fair to say that we have focused a significant amount of our land acquisition towards low density, and we're growing our first-time buyer market share quite aggressively. But that's not at the expense of the compelling products and apartments we offer for the state. The Land Development Agency and AHBs are not going to address the affordability challenge buying houses and small apartment schemes. They need scale. They're bigger now and professionally run operating platforms, and they need large apartment schemes in urban areas to address the challenge. You all know the type of level of applications they get for new crowd projects, and the level of demand for affordable rental. So that's still a very strong growth area for us. Richie mentioned the number of projects we now have on the forward fund. That's really supportive of the growth as well. I'm not sure we could grow as aggressively if it was all being funded from our balance sheet, Richie.
That's right. Yeah.
And it just supports that higher growth rate.
Yeah. Thanks again, guys.
Thanks, Tom. Thank you.
Thank you. We will now take the next question from the line of Edward Press from Berenberg. Please go ahead.
Hello, morning. I've got a couple, please. Firstly, with sales rate of 4.2, it looks to me as though you are selling at very much at the rate you can build. Are there any limiting factors that are any potential road bumps that you think could hold up your build rate? I'm thinking kind of infrastructure and labor availability down the line. And then secondly, as you approach 3,000 homes net in the 3,000 and 3,200 homes in the coming years, do you think of a limit in terms of the number of homes that you could look to before you might start to cannibalize existing sites, kind of with your current footprint?
I suppose on the build cost one, I'm not sure we fully answered the last question either, Richie, on the kind of geopolitical. Look, it's obviously a big watch out for us when we think about our go forward. We'll have to see how the situation evolves. We are about 75% procured for this year and 50% into next year, but as that situation evolves, it could have a significant impact on our supply chain. So it's something that just we have to be aware of, and we'll monitor closely. Beyond that, in terms of and that watch out for us, we don't see a limit to what we build, but we do think about relative market share. And I suppose one of the ways we can answer that question is Cairn today is a 3,000 unit business in a market that's likely to be growing to 40,000 units a year. That's still a relatively small market share for the business, and if housing output grows to 50 or 1,000 units or beyond, we certainly don't see limits to our growth. But I think, as I said in the intro, we've worked hard to build a brand reputation. We've got to protect our quality, and I think some of the CAGR rates we showed and those graphs of the 10 years just shows how considered we were in how we grew our output. We didn't necessarily grow our output in big chunks because we want to retain that quality, and we care a lot about health and safety, obviously, as well, which is critically important. So that's a couple of the points that you asked.
I think there was, and then you just obviously referenced the sales rate, and obviously you would have seen and heard this morning, going through the presentation. Look, demand is exceptionally strong in the market, so hence why the sales rate is so strong. Are there any headwinds in that could impact that? Look, obviously, what we spend a lot of time in the business is planning to try and get ahead of some of those roadblocks. Some of those roadblocks could be outside of our control from a connections point of view. But bar what we're seeing right now, I suppose we're reasonably comfortable with our launches coming up in the next number of months, that we would hope to see similar sales rates.
Yeah, and you're referring there to energy connections rates. Like, we've seen an improving landscape very much with energy providers in Ireland. Water infrastructure is improving. The government set up an infrastructure task force to address many of the challenges around infrastructure, which I think was a massively positive move, and that committee are staying on to help support the implementation of significant infrastructure spend in Ireland over the next 2, 3, 4 years. So, and thankfully the Irish government have the capital available to invest into infrastructure. So we'd also say that's really supportive of us and our growth opportunity.
Brilliant, thank you.
Thank you. There are no further questions at this time. I would now like to turn the conference back to Michael Stanley for closing remarks.
Thank you, Sandra. Thank you all for joining. Look forward to seeing you in person, many of you over the next couple of days, or catching up with you over Teams. Thank you for your continued support for Cairn and for our business, and wishing you a good day. Thank you.
This concludes today's conference call. Thank you for participating. You may now disconnect.